And you're not worried about stickier inflation with housing prices continuing to rise and the chip shortage continuing to last for about a couple of years or so?
Well, who am I to disagree with four central bank governors that you just showed right now? I think the message that we actually see in the numbers, at least in the US, but also in Europe, is that the year-on-year numbers continue to be high, but the month-on-month numbers are decelerating. And I think the central bank diagnosis of the problem is quite clear. It is some bottlenecks, some areas where supply and demand don't match up, but where markets over time will help clear those. And so that's why we don't think the inflationary numbers that we're seeing now are going to persist into next year.
The other side of the equation has been concerns about growth, which is why we continue to hear these concerns about stagflation. Where will the next leg up for growth come from?
Well, I think the growth has clearly hit an air pocket here with concerns about COVID, with the drama going on in Washington right now, the Chinese property sector that has sent tremors to global markets over the past couple of weeks. Having said that, though, the general trajectory of the global economy remains very much what it was earlier this year, which is one of recovery, the world opening up again, and very strong demand from households, corporations that have strong balance sheets and are ready to invest in new capital expenditure. And the two of those, combined with a continuing rollout of vaccines, we think leads to a next leg up over the next 12 to 18 months.
Christopher, is the global worsening energy crisis a game changer, though?
Well, if you're talking about what we're seeing in China, I think that's something we are watching very closely. The government of China, has all of the resources it needs to handle, we think, financial disruption from the property sector volatility that we've seen and the Evergrande woes. But it's very hard in the short term, at least, to intervene to make the power come back in sufficient quantities. And as I think your report earlier in the program highlighted, it's particularly hitting the industrial sector. I'm not sure it leads us to completely revise our views on China, which are that the economy is slowing down, but at a moderate pace, and that if you can pick your companies correctly, and I think in China in particular, you need a sharp pencil and a green eye shade to look at those books closely. But I think generally the Chinese outlook remains good. But as you say, the energy sector remains something we're watching as best we can.
As we are also watching the property sector, of course, and as you rightly point out, the lion's share of the debt obligations for Evergrande are within the state sector, right? That's comforting in the sense that we may not see a systemic, widening of the crisis. But does that also mean there's not much you can say about the deleveraging and then the structural reform agenda of Beijing if they were to have to, take out the toolbox to contain this?
Well, I think the 5-year plan, the government's plans to invest in the economy, I think remain very much intact. Its efforts to rebalance from industrial investment more towards consumer activity and domestic demand remain very much intact. I think the government is, as every government does when there is a financial crisis, it is to some extent improvising. It is proceeding very carefully. And as you've also pointed out, there's a political dimension to this. It needs to make sure that the domestic savers who have invested, put down payments down on apartments, get paid first, or make sure that their apartments are built, that the suppliers get paid their bills, and then you sort out the financial sector, and more likely than not, it will be the domestic owners of the debt who get priority over the foreigners. We'll have to see, and that's something that remains to be seen as this plays out. This is the first big restructuring I think we've really seen in the property sector, and so I think it'll be very informative for foreign investors as they look to what kind of residuals there are when all is said and done.
Do I sense a tone of cautious optimism when it comes to not only how China's Evergrande situation will unfold, but also concerns about stagflation? Are you as bullish when it comes to the market outlook then?
Well, markets have had a great run, except for the last week or so. but the valuations are something you have to keep closely in mind. Having said that, the macroeconomic backdrop that we have seen over the last year isn't going to be repeated next year, but I think the tailwinds are still very much greater than any potential headwinds. We're watching these risks, whether it's China, as I said, Washington, or some of the other potential new headlines we're going to get related to COVID and other variant outbreaks. But I think the general direction over the next year and a half has to be one of government support, fiscal spending, central bank support, even if it's tapering a little bit, still very accommodative liquidity, and strong balance sheets both in the corporate and the household sector. So that's what gives me generally an optimistic tone, even though we're watching very closely for these risks.